So Michael Saylor kind of cracked open the dam, if you will, in terms of corporations buying Bitcoin and putting it on their balance sheet. He did it in a very kind of transparent, honest way. And what I mean by that is he basically said to shareholders, I am considering doing this. If you do not want to be a part of this strategy, basically, I'll buy back your shares at a premium. And then he went ahead and started to execute this strategy. He has continued to kind of take out very low interest loans or debt. And by using capital markets, is able to continue to fund the further purchase of more and more Bitcoin. I think he's at now over 90,000 Bitcoin that he's put on that balance sheet, kind of $4.5 billion worth of value based on today's prices. Talk a little bit about what you evaluate the impact of this decision. Obviously, we've seen Square go out. They did a $50 million purchase, then another $170 million. Comes out to about 5% of their cash position. We've seen Tesla, about 7-8% of their cash position, about 1.5 billion. And there's a whole host of other kind of crypto-related businesses that obviously hold Bitcoin on their treasury as well in the public markets. But how do you evaluate kind of what we're seeing with corporations actually buying Bitcoin and putting it on their balance sheets?
Yeah, I think at a very high level, we're seeing this game theory that many Bitcoiners have long identified, as early as 2011, 12, 13, 14. We knew how the game theory of money operated. What was different about Bitcoin is that this is the first asset that kind of emerged at the retail level first before permeating these larger levels of organization. So I think that it's a really, really big deal. I mean, Saylor will probably go down. I joked with him at the opening of the show that for a company called MicroStrategy, this might be the most brilliant macro strategy ever executed. If the Bitcoin thesis continues to play out in the way that we think it will and the way that it currently is, he stands to become one of the most wealthy people in the world. And MicroStrategy stands to become one of the most successful companies in the world. And it's all a result of the game theory, or you can also think of this as the vortex of incentives that is Bitcoin, and that it basically has bootstrapped itself into existence by paying everyone to interact with it. And again, we saw this work at the individual level initially, where people could just mine it, convert electricity into Bitcoin. Then people found some value in its exchange properties. It can't be seized, it can be moved 24/7, et cetera, et cetera. So then it gained a market value. And as has been said, that was kind of the miracle event. Once Bitcoin established a market exchange value against fiat currency, that was the beginning of its monetization, essentially. Everything from that event has just been a step function of its constricting supply flow. So every 4 years it's constricting by 50%, and it's just bootstrapped itself upward. And for Saylor to make a move that bold, I mean, first of all, this guy is predisposed to understanding Bitcoin. Again, the guy that wrote the Mobile Wave, he understands network effects. He runs a business intelligence firm. He gets software. I think the last piece that he dropped in after March 2020 was just, central banking, basically, or monetary policy or Austrian economics, whatever that monetary element was that he plugged in, just sort of crystallized this worldview for him on Bitcoin. And no matter what amount of work we have done, like us Bitcoin ambassadors, and talking about it, educating, writing about it, money always speaks louder than words. Actions speak louder than words. So the fact that he's now up to, the initial allocation was $500 million from his treasury. He has since taken on some very cost-effective debt. I think his first round of convertible notes, unsecured debt, was at 75 basis points. I think the latest round was at 0. So it was literally taking on free debt capital. And the reason he's able to do that is because of the optionality Bitcoin is installed on his balance sheet effectively. So credit providers are willing to lend him money at 0% or 75 basis points so that they can get the option on MicroStrategy stock, which has the Bitcoin on its balance sheet. So it serves as a proxy for an option on Bitcoin effectively. And this all points to kind of a point he's made repeatedly, is that every company now faces similar incentives. They have to decide to plug into the Bitcoin network in one way or another, either putting it on their balance sheet, or as Square is doing, they're selling Bitcoin, right, which forced other corporations to adopt a similar strategy. They have to compete or die, effectively. So now PayPal is selling Bitcoin. I expect to see that continue. And this points to where I think fiat will just ultimately fail against Bitcoin, because everyone, so now we've seen this game theory permeate from the retail level to corporates. We would now expect it in the next, say, 5 to 10 years to see it permeate at the sovereign wealth fund or the central bank level. But every market actor, whether you're an individual or you're at the other end of the spectrum, faces incentives today to borrow dollars or borrow fiat at low cost to buy Bitcoin on term debt and then pay back depreciated dollars. So this is something Pierre Rochard wrote about in 2014. It's called a speculative attack, right? When every market actor faces incentives to borrow in the weak currency, buy the strong money. I don't like calling Bitcoin a currency because it's not governmental. So buy the strong money, sell the weak money, buy the strong money, and then pay back the weak money after inflation has eroded some of that real debt burden. This is like the digital asset, or something that's going to be eating the fiat structure from all sides, and that everyone wants to now borrow and sell, basically go short dollars and long Bitcoin. And this incentive is faced by all market actors. Really starts to make you believe that this thing could all play out much more quickly than we thought. Even this time last year, we were talking about this. It's like, Ray Dalio had not taken Bitcoin seriously at all up until that point. So in my mind then, it was like, oh, we're probably 25 years out from a central bank taking this seriously. But now, COVID as this great accelerator has just changed everything. And it seems now that the musical chairs, the game of musical chairs, has started at the corporate level. People are going to be racing to take a seat at the table that is the Bitcoin network. And now that we're north of $1 trillion market cap, we're almost to the point where it's taken very seriously as a macro asset. I'd say once you break 5 trillion market cap, it is a very serious macro asset, and every capital pool in the world will want to have some exposure to it. That's when things get really interesting, because the supply curve of Bitcoin, like it's perfect information. We all know what it is now, all the way into the future. And thus far in its history, its price has adhered to that supply curve. So what we're seeing today is still a function of the May 2020 halving. Right? We typically have these halving events. 12 to 18 months later, we have a huge price pump. If that pattern continues to repeat, the incentives to front run Bitcoin become astronomical, because everyone's looking at the same curve saying this thing's just going to keep going up. My strategy is to sit down at this table before anyone else sits down at this table. As market actors do that, they're actually increasing the market cap of Bitcoin, increasing the likelihood of its success, and further imposing that calculus on other market actors. So I think it is just a very interesting event. I think Saylor will be regarded as a pioneer, frankly, in Bitcoin. And he is proving that thesis at the corporate level. And now I think we're just waiting with bated breath to see it happen at the central bank level.
Yeah.